Yeah, thank you very much for inviting me. My name is Hendrik Brandis. I'm partner with Earlybird. Earlybird is in Germany originated venture capital firm. We're currently operating out of offices in Germany and Istanbul, covering all Europe.
Thank you.
So I'm Reshma Sohoni. I'm the co-founder and partner at Seedcamp. We are now an early stage acceleration fund, 20 million euro fund since last year. We're investing in about 30 companies a year at the very early stages, all across Europe. We're headquartered out of London, but our whole sort of objective is to unlock capital markets across San Francisco, New York, Boston, London, and Berlin particularly as well.
Manu, Gupta. I'm one of the general partners at Lakestar. We are a stage-agnostic venture capital firm. We have offices in Berlin, London, and New York, and we do 50% United States, 50% Europe, and really helping cross the bridge between the two.
I'm Vidal, partner at Index. So we have 3 offices, Geneva, London, San Francisco. We have 2 funds. We have an early stage fund and a growth fund, a 400 million euro early stage and a 500 million euro growth fund. And roughly the same, 50-50 between Europe and US.
Hi, this is the first panel I've ever been to that started early. Congratulations, everyone really wants to leave.
Well, you know, we take this punctuality to another level.
Clearly, it's Germany.
We'd like to be ahead of punctuality.
Sonali, Rycker, partner at Accel, partners based in London. We're a global venture capital firm with over 30 years of a track record, starting from Silicon Valley, but now active in Europe, from London, in India, from Bangalore, and across China. It's great to be here.
Thank you very much. So, Dom, I like you in particular because when I did my first NOAH, you was the first person ever to call me an entrepreneur. Most people just called me a stupid banker. So I want to say thank you 7 years later after sponsoring the first NOAH event in London. Now, let's start with the provocative theme. We have all heard this 2 days that venture capital in Europe is lagging behind. Do you feel that the industry is lagging behind? Maybe, Manu, you are active on both sides of the ocean. Do you see that Europe is lagging behind? I mean, there are the numbers, but then there's kind of the subjective feel to it.
Yeah, so it's interesting, and actually, I just had a discussion with some other VCs about this. Welcome. We're early, so no. So I think, look, it's not lagging. It's just a different phase in the life cycle. You know, at the end of the day, I'm American, but I live in Europe, and we have to make this the best economy we possibly can. And therefore, we have to make sure that this ecosystem develops in exactly the same way and builds as many big winners here as there are in other geographies. The nice thing about technology today, your development teams can be anywhere. So I don't necessarily care if your tech teams are in Barcelona or they're in Istanbul or where not. But the reality is that I think that what happens is a greater source of capital goes into the United States today. And it will change, especially with us sitting here on stage, and we're going to be able to deploy a lot more capital collectively into great European businesses. So I think we will get there, and it will just take some time.
So when we talk about the stats and the VC money in Europe is lagging behind the US, and people blame VCs or people blame the regulatory environment, isn't the #1 reason that there isn't more VC money spent in Europe, that there's a lack of opportunities? Sonali, you think that entrepreneurship in Europe is just not bringing out enough interesting companies so that the numbers are looking weaker to the US?
Well, I think, first of all, I just want to say that some of us were investors in a company called Supercell.
Supercell?
Which SoftBank acquired the last portion that they didn't own last week. And it was, there's been a lot of discussion around it, but it was a very large business and a very large exit. So when we talk about no big returns and no big exits in Europe, that's just wrong. It's fundamentally one of the most incredible businesses we've been privileged enough to be investors in. So I think the proof is there now, and it has been for now a few years, and that's just one of the many ones. And we're very all lucky to be in some of these companies. No, not at all. I think Europe is just a younger market. I mean, if you think about Silicon Valley is not just a location, it's a philosophy that has been perfected over 50 years around how people think about entrepreneurship. And my view is that there are great entrepreneurs here, and there always has been, and we're seeing a greater and greater supply of them. And the demand is being matched up. It just takes longer. It's a younger economy. I will tell you that what is beautiful about the market today is that entrepreneurship is actually taking center stage. For the first time, people can actually go get a job as being an entrepreneur.
I have really difficulties following you. Can you speak a bit slower, louder?
People can get a job. Being an entrepreneur is a job for the first time. And so our view is that this is not a supply and demand problem. It's just a maturity problem.
Okay, so let's talk about entrepreneurship. And sorry, we started early.
Sorry, you want us to introduce ourselves? Or?
You will in a second when I address the questions. Dom, tell me one thing, entrepreneurship. Yeah, I mean, we all consider ourselves entrepreneurs. What makes a great entrepreneur? When you try to find companies to invest in, what are you looking at? What does the entrepreneur need to bring? I hope not a banker.
What makes great entrepreneurs, I believe, is you have a lot of characteristics. Probably creative people. A lot of time, we find entrepreneurs who have never worked for anybody. They hate having a boss. They want to be free. They want to take risk. These people usually take a lot of risk. They have personality-wise, they have several characteristics. We joke a lot with Jean-Baptiste from Criteo as example. I believe a lot of them have sometimes slightly autistic. So it's like something that is a little weird, but that makes them very interesting, create some very interesting characteristics because they are very rational in the decision they make. So it's a lot of things. It's not one thing. It's all these elements. That's what you try to understand when you meet people. And don't take me wrong, I'm not looking for autistic people, but they have this kind of, they are different. They are different people. And when you find, it's something I always share, I meet a lot of people, and for me, it's out of 10 meetings, I have 9 interesting meetings, but I have 1 exceptional meeting. And usually this is a very special entrepreneur. And that's all these characteristics you're looking for that you find when you meet these people.
Thank you. Nenad, say something about you and your fund, please.
So I'm Nenad. I'm one of the founders of DN Capital. We're a venture capital firm focused on early stage and growth investments in Europe and the US. So in Europe, we focus on UK and Germany. In fact, our last fund, which is about 144 million euros, we've invested over 60% of that fund in Germany. Some of the companies we've invested in here include Verkaufen dein Auto, Mr. Specs, Vinland.de, Home2Go, also Shazam, Indeka, and things like that. So we like to go very early, probably more early than some of the guys here, but we're a smaller fund. Yeah.
Okay. And Hendrik, you Earlybird, literally as the name says, you have been in German VC an Earlybird, right? You have been here one of the first. Tell us what happened over the last 5 years, and in particular in Berlin. Did you see the German VC or the German entrepreneurship scene growing up? As Manu said, it's just a question of time. What changes did you see?
I mean, evidently, there's a tremendous momentum which has been created here in Berlin over the last 5 years. Did I foresee that? No, I didn't. I was surprised as well. But as we discovered it, we followed it as quick as possible and moved here into the center of the momentum here in Berlin. I think more and more we see as a center of gravitation also for the VCs, which traditionally in Germany have been around Munich. More and more VCs coming to Berlin here to participate, which is natural. However, if I look at the number of active VC funds here in Germany, it's pretty stagnant.
And why is that?
I mean, if you look back in the year 2000, we had about 107 registered VC funds in Germany being active. My guesstimate for right now is around 15. And that would also include already small funds. And that is a disastrous low number if you compare that with the US, where you probably have 500. And GDP is only four times higher. I think it is because, I mean, it was the German VCs were, in the vast majority, created in the late 90s and were hit by the burst of the bubble right in the first fund generation. They didn't have the chance to really build up a track record which would have given them credibility to survive the burst of the bubble. So most of the 107 funds I was mentioning earlier just went out of the business after the burst of the bubble. I can only name 3 which have survived out of the 107, and the other 12 or so have been created in the last 15 years after the burst of the bubble. So it's the lack of track record, the 25 years before 2000 that has hurt us. Second thing is...
So it's not a lack of opportunities?
It's for sure not a lack of opportunities, by no means, especially not in the last 5 years, because through the advent of the internet, we are now operating in an economic room of more than 3 billion people, and it doesn't really matter whether you're going to host it in Los Angeles, in San Francisco, in Shanghai, or in Munich, or in Berlin. So I think it is even in, it's much more a level playing field than it used to be 5 years earlier in our days. So I think opportunities have even improved. One thing I'd like to mention, because you were asking why the VC scene is so relatively weak here, 2/3 of the VC money in the US is coming from endowments and pension plans. That is a class of LPs which hardly exist in Europe, and they don't exist in Germany at all.
So it's harder to raise money.
It's much harder.
And you're not allowed, I think, to raise money from the US that easily.
We are allowed, but it's still so that if you're an investor in San Francisco, it's much easier to invest in Palo Alto than in Berlin or Munich, yeah? Because you don't speak the language, it's harder to build trust. At the end of the day, you commit to blind pools. You really need to assess people and give them the benefit of the doubt. And it's easier to do that in your home area, in your home network, than abroad.
Okay. I have a question for you. Seedcamp is one of the earlier funds, yeah? And when we interact with people coming to our conference, etc., we see the quality over the years of entrepreneurs rising. What kind of applications and quality of business plans you get? Has it improved over the years?
Yeah, dramatically. I mean, I think one of the key, if you talk about what kind of entrepreneurs do you look for? It changes by stage in the sense that at the early stage, you have nothing, you have no data. So what do we look for? And I think the main quality that's dramatically improved is the kind of commercial desire. So for entrepreneurs really displaying that, they want to go after a global market, so much bigger in ambition, but in terms of really thinking about what the commercial drivers are and going at it from a commercial bent rather than a purely technical bent. Because obviously I think for organizations such as ours, we do attract a very technical set of founders. They're often first-time entrepreneurs, so they haven't had a couple of successes under their belt yet. So I think that's been the biggest kind of quality change, and it's fantastic to see that sort of improvement. I think the other thing is, as the opportunities have actually improved faster than the capital, and a lot of that has been because of sort of the access to capital has democratized globally again.
So that's a bad thing. If there are more ideas than capital, we have underfunded entrepreneurs.
For sure. I mean, if you look at, so we've only invested a few million into our companies. They've gone on to raise over 300 million in the last 6 years, right? And more than a third comes from US capital. So, over 120 million is capital not invested into by European VC. So
okay.
it had to come from sort of somewhere. It's coming from the US a lot.
Thank you. Tomasz, you're from Poland. Please introduce yourself.
Yes. Hello. Yes, I'm from Warsaw. That I manage 500 million.
Bit louder, slowly and clear. Sorry,
Yes,
otherwise
yes,
nobody hears you.
I'm from Warsaw. I manage 500 million captive investment group divided into 4 funds, doing early stage investments in Poland, doing growth stage investment in Europe, doing buyout investments in Poland, Czech Republic, Germany, Turkey, and doing debt investment. It means credit ventures, venture debt, and mezzanine finance. We are on the market 16 years already. We delivered 26% gross IRR. We are 33 people. We did 4 investments in Germany, Vidal, Auctionata, As Good As New, and 21 Diamonds.
And I think you and Nenad, despite sitting far away from each other, you have done one deal very closely together, which was Vidal.de.
We are not so far away because we are both from Eastern Europe. Nenad is from Croatia, I'm from Poland.
Let's talk about Vidal.de. We had Konstantin on stage earlier. And, you know, I think the main criticism we get is not enough VC money for Europe. And if there is a winner, they sell out too early. Now, an IPO is not selling, but what was the thinking at Vidal? And I don't want to have any discussion about the valuation. That's an uninteresting topic. But Vidal was at the time at a stage where I guess you could have raised more capital for global expansion. You could have sold. You could have gone public. What was the thinking process? And is it right that German or European entrepreneurs are giving in too early in your mind?
So, little context here. So, coming back to a little bit to your question before about entrepreneurs. So I met Alex and Konstantin 2010 in August. I put the first check of 250K in the company. The company launched in November 2010. They did their first quarter's business plan in the first 2 weeks. They did their first year's plan in the first quarter. And this was the history of this company. This company almost has not missed a month in 5 years in terms of their budget. I've been in this business a long time. Very few companies.
Was it a question of bad planning?
You know, your budget is, and for the advice for the entrepreneurs, I mean, put budgets to your board that you can hit, because going to board meetings where constantly the team is missing budgets is not an easy way for you to get further capital. So anyway, coming back to the point, this is a company that's always outperformed, very complicated shareholder group, too many layers of pref, and the IPO was the perfect way for us to, one, raise capital for the company, to provide the capital, which obviously you can read in the prospectus, is to do the things we're doing. And the company is doing very well. And I can't, obviously, it's a public company, I'm on the board, so I can't say much more. But IPO is the perfect route for Finland.
Okay. Frank, tell us about your background. We know each other from some other situations, but I think you're a quite public figure in Germany.
My name is Frank. I'm doing seed investments in technology and design-driven companies who do this with Mark Zieberger, and we focus on early stage and put in the small money, but also be involved then in building the team, technology, and product.
Thank you. So since we have like the best of European investors here, and interestingly, these faces don't change. Most of you, we work together since the first NOAH, but I would like to do like 3 questions, which we take one by one, quick. So it's also a question of discipline. Can you make short sentences as answers? And then we would like to open it up to the audience. So let's try this one with yes, no, maybe. Is American internet companies higher valued than Europeans?
Yes.
Yes.
What's the question again?
US higher valued than Europe.
Slower.
I love it.
And louder.
US higher valued than European companies.
Oh, okay.
It's just true, isn't it? It's just fact, right?
Yes or no?
Yeah, fact.
I just want to know if you know the
Yeah.
facts.
Yeah.
Not always.
Not always.
For some.
For
but not
some.
all.
Yes.
Germany is getting expensive.
Germany's getting expensive. It's all relative. But interestingly, not so many US VCs are actually opening offices. They do close deals, I hear, some of them. What does your fund bring to the entrepreneur other than money? 1, 2, 3.
3 things. Team building, business development, international expansion.
Wow, I don't need to hire any people. I just get you a company to invest, and then I can staff my half.
That's what we do.
And team building means you're helping hiring?
Yeah, so if you take Shazam, for example, we've put in half the team out of our network, no headhunters involved, Mr. Specs, Vinland, et cetera.
So again, team building.
Business development, international expansion.
International expansion.
Team building, strategic coaching, business development contacts.
Mindset building, getting product to market, and getting the best investor money they possibly can after us.
Helping on the follow-on rounds.
The best deal possible.
Which is very good.
I mean, I think we would do something very similar. I would only argue to all the entrepreneurs, you guys should do as much diligence on all of us as we would do on you, because I could tell you whatever I'm going to tell you, but honestly, you should talk to the entrepreneurs to see who helps in what ways best.
Absolutely.
Maybe we do it the other way around. What is the bad VC, Dom? What do you think would be the worst?
It's unfair. It's unfair. I prepare my three things.
Go for the three. Go for the three.
Go for my three. So it's a network of companies. So it's a family. One, it's hiring, and probably most important, a sounding board for CEOs. What do you think is a bad VC? Is there someone calling all the time? How are your numbers? How are your numbers? I believe probably the only thing you'll be afraid is someone who is going to tell you what you need to do.
Yeah, entrepreneurs who want to be independent, as you said earlier, don't want to be told what to do. Sonali, what's your view on qualities a VC can bring to an entrepreneur?
I think a lot of us do many of the same things, but I think the two things that we really focus on is one, we're your partner for life. Our average investment period is 9 years. You'll go up, you'll go down, you'll go up again, and we'll stick with you. And the second one is if you have any ambition to be a global category leader, you want to be with a partner who's global, and that's what we are.
Okay. Frank.
Stay with Manu. It's really do your own due diligence, call people what the VCs are really doing. So what I've seen in my experience is that only very few VCs are delivering those value adds that they say, and everybody say all this team building and everything, but I never see this or rarely see this in real life. So do your due diligence, check the VCs. We are early stage, so we're really hands-on, but also call the entrepreneurs.
Tomasz.
So we bring the most important factor, which is called luck.
You bring luck. Your rainmaker.
Which transfer, yes, and which transfer to, over the last 15 years, we lost 3% of money invested, yes.
Okay, so we had at this conference 10 industries, and there are a lot of founders here who probably have several ideas. And obviously, flavor of the day is mobility. We saw how much capital was raised, but there's variables, etc. You probably remember our 10 industry verticals. At least you remember the ones you're most interested in. I would like to know, out of our verticals, which ones are the ones you're looking actively for opportunities? Maybe start with Tomasz.
Thank you. We have a massive wave of e-commerce investments, digital media investments, ad tech, etc. Right now, we are very much focused on fintech. Fintech, marketplaces, software as a service.
Software as a service.
As a growth capital
in London, we will have a special, at NOAH London, a specialty on SaaS companies, and we also have a special on big data. So we'll see you there again.
We will accept the invitation to be in the panel.
Frank.
Fintech and productivity.
Fintech and productivity.
It was not a track here, but in general, thing we do productivity.
Sonali?
We're spending a lot of time in the data center and how it's being rewritten. I know not the favorite topic for this conference. And on the other end, we're spending a lot of time on consumer-to-consumer marketplaces. So true consumer-to-consumer, win locally, and then you got the playbook to keep going.
And I think the gentleman to your left knows a lot about consumer-to-consumer marketplace with Etsy, right? Which was one of your deals.
It was a good one, or blah, blah, or yeah, you have few great.
Dom, what are you? You are always so relaxed. You know, when I meet you, you're never stressed. And what is now getting you excited when you think about themes?
Sorry, about?
What themes, like investment themes or sectors? Is healthcare a topic for you?
It's a good one. I was thinking about that. It's a great one. It's always a mix. You want to go deeper in categories like fintech, where you've seen a major change, or transportation, when you start to see huge industry getting disrupted, but also new industry, and health would be a good one. Yeah.
The business partner of Manu, Klaus Hommels, told me once that when he was asked, Klaus, why did you spend so much money for this company? He said, I would have also spent 30% more. And the last deal I didn't do, I wouldn't have done it for 30% less. Lakestar is an investor active on both sides, and you are partly playing the big momentum deals, but you are quite unique in the way what you're looking for. Maybe, Manu, you can give a little bit the focus on what segments you're excited about.
Yeah, sure. So I think, I say, for example, real estate. I think real estate is such an archaic industry, and through technology, not just search and discovery, which has happened 10, 15 years ago, but data and analytics, lead generation, and most importantly, real estate finance, which is a derivative of fintech. So, and we looked at a landscape of 47 different private real estate tech companies, and we ended up making investments in 2 real estate finance businesses, and we'll continue to do more. Spending a lot of time in healthcare, same as you, and then one of the other new areas that we're spending a bit more time is on augmented reality and VR. Basically, I don't know when that's going to take off. It could be 2 years, it could be 10 years, but at least we should all get educated on it because it's very exciting.
Reshma.
We do 35 investments a year, so obviously I'm probably the most excited person on the panel. I have to be, it's my job. But you know, fintech, we were on the bleeding edge of it back in 2007. Multiple numbers of us lost investments in that. So fintech, obviously, property tech as well. We have a couple of things within artificial intelligence, but we have no idea if they're going to be businesses. So we're still sort of figuring out with the
maybe artificial businesses.
Maybe artificial, but hope not. Hope not. So AI is really interesting. We're also looking at value chains and you know the entire
on the B2B side, value chains, or
no, like property tech or fintech, and making multiple plays because we can, by the nature of who we are, within a whole property chain. So everything from discovery to financing to actual buying properties online and so forth. So same thing with fintech. We've gone a little bit crazy on credit card companies recently, so we'll see how that plays out. So,
Hendrik, what was the last deal you guys did?
Not yet announced, but I think the one before was, SimScale, I'm not quite sure. Generally speaking, I see a significant shift from consumer internet to enterprise internet. We're doing much more looking at enterprise internet in the recent months and probably even year. We're looking at Internet of Things themes combined with enterprise internet. We had a certain emphasis over the years in fintech, and I think that will remain to be so. Interesting opportunities there, and of course, if we look at consumer internet, it's emphasis on marketplaces, so we're not so much different there.
Nenad, before the Q&A, shoot.
Okay, so I focus on mobile, consumer internet, and a little bit on marketplaces. And so some of the themes on mobile, obviously Shazam still, and also changing. We just launched the visual product last week. One of my favorite companies is Happen. How many people have heard of Happen? So this is going to revolutionize dating with your phone, basically based on people whose path you cross. And then continuing, we still like the marketplace space, and we have a company here in Berlin called Verkaufendein Auto, which is doing pretty good, as you'll find out soon.
So as a banker, we get a lot of questions, can you help us raise some money? Now, I find the smaller fundraising deals really, really hard to do. And as an excuse, we always say to people, a hot company doesn't need a boring guy like us. You can raise money in a heartbeat. And in fact, when you raise money, you don't want to have like a fifth wheel or someone holding the lamp in the room. When you look at deals, how do you feel when it comes through people like intermediaries, like beautiful presentations? Does it matter, or do you really like to have a preferred dialogue, like a more proprietary deal with the entrepreneur? I'm not addressing anyone specific. The one with the biggest view should have a say.
I think it depends on what stage.
Okay.
If it's early stage and the guy can't find a way to get to us, that's a problem. If it's a growth round of 100 million euros or more, then
Then
maybe
it's processed. Then people
Then
who
it's
have done it
okay.
before should do it again, and they focus on the business. And what do you think, Dom, is a cutoff? Where you expect from an entrepreneur to do the deal on their own versus hiring an intermediary?
I believe they should most of the time. My advice to all entrepreneurs, I've been there, is always, before you go to a process, test the market. There are always 1 or 2 people you like, you enjoy, and talk to them and try to see if you can do something with people you really like. And if it doesn't work, at that point, start a process. So I would never advocate starting a process from the get-go, but always start working. As you were saying, you're probably going to work with these people for 5, 7, 9 years. Better work with people you will enjoy working with.
So I would like the ones to raise their hands who have done the last deal with an intermediary, obviously incoming versus without. Who has done the last financing with the help of an intermediary? In. Okay, well, I'm a dying species.
Oh.
Good that the conference business is going okay. Okay, so let's take some questions from the audience once we have the microphone. Is there a microphone coming? Okay. Oh shit, I have to run again. Okay. Okay, Mario.
Hi, my name is Adam from Warsaw. I have a question to Tomasz. There is a fact that, as was stated, European VC is underdeveloped in compared to American market. Would you agree with the statement that Central Eastern European VC market is underdeveloped to the Western Europe? And what is your opinion on the future of the e-commerce and surrounding businesses sectors in Central and Eastern Europe?
I think compared to Germany, Poland and Czech Republic have much more liquidity, and that was a problem in the past because the region does not produce European champions and not so much global champions. There are a couple of examples in Czech Republic, that's it. And there is a lot of liquidity which is looking to be invested into the companies, and that's a current issue that simply if you build a national champion or regional champion in Eastern Europe, exit value is around 25 million euro to 100 million euro. With the amount of money you need to raise to achieve that, it's basically difficult to get an economic return. That's why, yes.
There's a deal coming.
Yes,
Don't let it go.
that's why we decided to basically go out from Eastern Europe and let's say from Central Eastern Europe and be more like a European investor, because if you build a European champion, you're basically looking to exit the company with 1 billion euro valuation. There is much more space for acquiring equity investments. And just to give you the numbers, there are like 20 active funds in Poland. There are like 5, 6 active funds in Czech Republic that I don't think, if you look at the GDP at population level and amount of supply of projects, this region is underdeveloped in terms of venture capital. And if you look at Germany, for example, Łukasz Gadowski or Point 9, they are Polish people doing investments. Even Marco have a Polish roots, right?
I approach whom?
You have Polish roots. You always said that Rodzynek is a Polish surname.
Oh yeah, I'm Polish, half
Yes,
Polish. At least
yes.
my name is, the second name is Polish, the first is Italian. So next question, please. There, Aaron again. Oh, actually, why don't we start with Jennifer and then Aaron? He had to wait before as well. It's here. I can give you this.
So my question is, a lot of the panelists said that... oh, wait, here you go. Thank you.
You took a photo at least.
Okay. A lot of the panelists mentioned fintech as an area of interest. We do have here in Europe a company called blockchain.info, which is a category leader. They have the most number of Bitcoin wallet users around the world. Do you see blockchain technology, which has the potential to carry anything of value, as an area of interest? And do we have some other interesting Bitcoin or blockchain companies in Europe that should be on everybody's radar?
Yeah, there's a, we invest in a company called Elliptic. They are doing storage for any sort of blockchain-related transactions. So they have about 30 enterprise customers, which they can never talk about because it's all anonymous. But it's amazing what they're sort of building out. They recently kind of showed us a map of every Bitcoin transaction ever done on the planet. And so it's kind of incredible what they're able to do. We've been talking to a couple of land companies, looking at doing kind of land data off of blockchain as well, insurance off of building it on top of a blockchain, people traits, personalities off. So blockchain kind of has a fundamental layer to a lot of different kinds of applications.
Okay, 30 more questions. Please think about something. By the way, who's currently actively looking for funds or not actively looking for funds? Hands up. I guess we can go home. There's no client for you. There's one. You have a question? Maria.
Thank you.
Oh, Aaron, sorry.
Yeah. Thank you, Marco, for giving me a second chance, second
It's
question.
always a second chance.
And this time, let me start by saying that my name is Aaron Davidson. I'm one of you, venture capitalists for the last 20 years, last 10 in Germany. Background for my question, which is going to be a bit brutally honest. Let's talk about performance. Ooh. And I know we are squeezed between the companies we invest in, our own investors, and we ourselves are always in the fundraising mode, or at least one in 3 or 4 years. But I'm asking, very honestly, maybe our performance is not good enough. Why is it so difficult for us here in Europe to raise faster, bigger funds? What is the performance we have? Let's see if any of us can answer this question. And is it good enough to raise more money? And how long will it stay like that? So it's all about performance. That's what I think.
So the IRRs of the industry for VC funds, is it an issue that, the American pension funds, etc., don't want to invest in your funds because your returns are so low? Does anyone know the average industry IRRs these days? Manu, you're a data genius.
No, so I just went on a fundraising tour. We've just raised our fund. We met a lot of the US institutional pension funds and institutions in the last 2-3 months. So what I can tell you is that it's a myth for you to believe that US venture generates excess returns versus European venture. It's a total goddamn myth. Yeah? So, and I've seen a lot of the data. But what I will tell you is that the top quartile American funds, the top 5, the top 10, they generate significantly better multiple fund returns than what I've seen.
And how
here
does this top quartile compare to the European top quartile?
Well, it's significantly bigger because we don't yet, and I use the term operatively yet, we don't yet have the Googles and the Facebooks and the Ubers, really driving up fund returns for us. It will happen eventually, and I'm very hopeful of this ecosystem, but I think that's what drives the top quartile returns in the US. But trust me, for everything beyond that, it completely matches European VC returns.
Nenad, how are your returns?
So our returns are pretty good. We tripled our fund size last year, if that's an indication. But most people will look at the Cambridge Associates top quartile figures as a benchmark. Obviously, it's the Sequoia, the Accels, US funds, et cetera, probably have the abnormal returns. But I think if you look at the VC funds in Europe today that are active, sitting on these panels or raising money, those guys, are actually performing probably equally as good, if not better, than those top quartile numbers. Our numbers are considerably better than that. However, you still have a lot of US LPs that don't want LPs that don't want to actually come to Europe yet. We had the whole euro thing, right? Remember the last 5 years? That was a big scare for a lot of investors. Now that the euro has solidified, you're seeing a lot of money. And then someone earlier talked about Berlin. There's 5 new early stage funds being raised right now in Berlin, all around between 40 and 75 million euro bases, and they've had first close. So, 5 years ago, you maybe had 5 firms with money, but now you've got 10 to 15 firms that have that, 50 to 100 million euro firepower here in this town. So I think it's a very different market than, 5 years ago here in Berlin.
So returns are okay, fortunately. Next question, Maria. Anyone here? Question? Oh, there's one.
Hi, so thanks first of all for sharing your insights. And I got a question to you. Where is Berlin on a life cycle regarding investments and so on?
It's probably a question for Hendrik, no?
Where's Berlin? Is that the question?
So I think Manu or Dom said earlier that it's a question of maturity when there's every city or every region follows the same path. So I guess a follow-on question to that. So where do we stand in Berlin?
I think we're still standing in a very early phase of its development. I think I see, the ecosystem really filling up right now. We're starting to get critical size, where it is self-reinforcing, attracting more capital. We're seeing first Berlin-grown companies like 600 Kinder being sold to the US, still not at the level one would like to see them, but it's starting. And I foresee huge opportunities in the next couple of years. So I'm absolutely sure we're still in the very early phase of a very promising future here. Absolutely.
One more question.
Can I just add on to that Berlin thing?
Oh, yeah, please. Yes,
Ollie was here yesterday, and we look at deals in Silicon Valley, we look at deals in London, New York, Paris, .com, et cetera. And the quality of the entrepreneurs that we've seen, ex-Rocket entrepreneurs, is probably the highest we've seen just about anywhere. You take a Philip Magin, the founder of Quandu. We just recently sold that to Recruit. I'd put him against any entrepreneur anywhere in the world. Okay, so and he's 29 years old. He's probably got 5 companies left in him. So this Berlin, and I think thanks to Ollie, all the work that he's put in building this ecosystem, has got some of the best entrepreneurs we've seen anywhere. So we're very bullish. And as Hendrik said, phase one.
Do you need to be a serial entrepreneur these times to get funding? Does it matter for you, Sonali?
Our average age in our portfolio just keeps going down and down. We recently invested in a 21-year-old. And this is what I mean. When people are coming out of school, they have the role models, they have access to capital, they have the ideas because the entire technology industry is changing in front of us like never before. And I think they're getting jobs as being an entrepreneur as opposed to going to McKinsey or Goldman Sachs. And so not at all. And actually, that's never been as true as today.
Okay, so we talked a little bit about the ecosystem. It's not that bad. It's probably on orange, but getting to green. Berlin is growing up, 5 new funds raising money, not going too badly. Your returns are fine, no lack of ideas. Let's talk about mistakes.
Let's talk about shortcomings. So, I mean, it sounds like that everything is in order. I'd like to say this is not the case. I think what I consider to be one of the biggest challenges for our ecosystem is still that I think the ecosystem is heavily underfunded. At some point of time, if you have a great idea, you have a great entrepreneur, great business, you just need the fuel to really drive it. And if we're not going to be able to quickly raise significant rounds for gaining global leadership, we will lacking, even in the future, the billion-dollar exits. And I think there's a certain valley of death in late-stage funding before you can really hit international capital markets, attract American funds coming in with large tickets, where European Berlin-based startups still have difficulties to raise quickly enough, large enough amounts in order to really make it. I think if we could, you know, incrementally fill that
But
gap.
maybe they shouldn't raise the money if they have difficulties raising it, no?
Yeah, the thing is, I mean, $50 billion invested in venture capital in 2014 in the US, and what is it, 5 billion in Europe? That's a factor of 1 to 10, yeah? And maybe we shouldn't invest 50 in Europe, but maybe we should invest 10 to 15 instead of 5. Because I really see that, I mean, at the end of the day, what happens through the internet, we have a common platform for everybody. And in many cases, it's a global rat race for category leadership. And if you have, on the one hand side, you're invested in the company which got 100 million in the second round, and you're trying to raise 5 or 8, it's not level playing field. It's pretty hard to really be competitive then and win the race. And I think this inherent disadvantage, many of potentially good companies in Europe suffer from that inherent disadvantage. And I would love to see more late-stage funds coming in and allocating significant amounts. I'm talking about the 10, 15 million rounds, Series B rounds here, in order to accelerate the growth pace of good companies here.
Yeah, that's a little bit the dead spot between the 15 and 50. Like
exactly.
Series A before growth capital-ish.
That's a very good example with My Taxi from Nick Mewis, the company you also know. He started the company before Uber. We've been one of the first investors, and we were really there before Uber. It was not a copycat, and we already had a working prototype and everything. But then raising capital along the way, and then especially speeding it up. Uber was so brilliantly in fundraising. They had so massive capital that it was very tough for us to compete. I mean, it's still a big success, and it's a great company.
The problem is also, I remember, the problem is when an American counterpart to a European company has raised like 10 times as much as a European, you can be so creative, you can be so hardworking like Oliver Zamwer. The money just makes a difference, right?
Yeah, but it's changing. I mean, there's a lot of people looking at this market. We've had 4 companies in the last...
So a lot of people looking at?
This market, Europe, not
this
just...
market.
Yeah, we've had 4 companies raise over 300 million euros in the last 8 months. And so
So Goldman... Delivery was acquisition financing?
No, Goldman Sachs came into 2 of our companies. DST came into Rycker van Auto for quite a bit of money. And Shazam just raised another 50 million. So it's there.
Who they raised the money from?
Can't say. But
you ask people for the last year, they tell you, the one I'm going to announce I can't talk about.
But if you have a good company, the money will come. I don't believe you're going to have trouble raising the money.
And by the way, the purpose of NOAH is to fix exactly the problem of this dead spot. And we want to help European companies. We want to give them a platform. And in London, we have 400 investment funds. It's competitive, but not everyone is looking at everything. I think, Tomasz, you wanted to say something.
With my experience, because we are also investing in the small markets like Baltic states and Czech Republic, and we are seeing then that there are great local companies built with a very small amount of money, because there wasn't supply of money. Yes. And I think also such a huge supply of money could be in danger. Before I started MCI, I built a company which was $100 million in business without any fundraising. Yes, that's I think when we're currently building companies using so much cash, it could be a threat for the future because it allows people to spend a lot of money. And if this oversupply of the money, it usually means that we are close to the bubble.
Okay, well, time is up. First NOAH conference Berlin gets to a finish. We are reasonably happy. I hope you guys had a good trip and met some interesting companies and bring in all the funds you raised into great European ideas. I want to say thank you to everyone for being here. We will see you in London in November, hopefully.